Welcome back. Well, Kenya is trying to keep up with a growing middle class. It's putting up malls and a number of high-rise buildings around the country's wealthy suburbs. Restaurants and indoor swimming pools are all part of a menu to tap into the growing demand.
Life in Nairobi is changing. This is the layout for a 968 square meter shopping mall in one of Nairobi's wealthiest suburbs. Developers say they are certain it will succeed.
You'd think that there would be, some centers would then be empty, but that's never the case. Every new center that opens, there's always a footfall coming in because people have got the spending power.
Anchor tenants like French retailer Carrefour have already signed lease agreements for space at the Two Rivers Mall. Investors see huge opportunities in Kenya, which has benefited from recent oil discoveries. An official for one local developer says clients are aiming higher, literally.
Earlier, people used to go for over here, maybe 5-6 years back, they want first floor, second floor only. But now the trend has changed. People want to go on the higher floors, be it residential or commercial.
But some say only a select few would take up the properties.
I find that some of the properties are pretty expensive. Like, for example, you find a house is going for 14 million, 10 million, 8 million. For an average Kenyan, that is quite on the higher side.
And if the cost of a 900,000 and 1.7 million rand home sounds too much, there's another reason why owning a home remains out of reach for many Kenyans.
The cost of land is completely way, and it's not even comparable to many other developed economies, even including America. Whereas in America, it would be completely varied, where the cost of land is much, much lower, but then the cost of labor is very expensive and things like that.
The target market for property ownership is tiny in Kenya, with the Bankers Association reporting a mere 22,000 residential mortgages out of the country's 40 million population.
Well, Moneyline has received many questions on what the best way to get into the market is and how to go about it. Investors continue to suggest one investment method or the other, but how can you get into the world of investing into the JSE and the local market without breaking the bank and feeling like you have to put in your whole salary for the right reward? So tonight, senior trader Lavan Gopaul helps us to unpack Satrix and what it means. Lavan, thank you so much for joining us today.
So Siki, it's one of the easiest ways for a private individual to get access to the JSE. The Satrix is a exchange-traded fund. This has been available since the year 2000. It's very easy to understand. Satrix is a collection of the top 40 shares. In this, you'll find companies that the South African public are well aware of.
Yeah.
Big brand businesses, they include the likes of Pick n Pay or Woolies. They would include big banks like Standard Bank and Nedbank, large mining houses like Billiton, etc. What's very, very appealing about Satrix is one doesn't have to be a financial genius to try and be a part of the JSE
like most
or
of
investing.
Us.
So for all of us that want to be in the exchange, that don't have all of the knowledge or are unable to research it, and most importantly, don't have millions to get involved, this is a convenient way. It's designed so that it will always reflect the best 40 businesses on the JSE
that are listed on our stock exchange. So before we get into Satrix itself, what makes it popular and how people can get in, there are over 60 listed exchange traded products on the JSE. What makes Satrix different?
So there's a number of exchange traded products, all of which have a different slant. Some of them are very specialized, or they would look at certain subsectors. They may follow, for example, financial shares. They may follow property shares, etc. All of them do have certain appeal, but for a novice investor, for a first-time investor, I would recommend something like the Satrix 40, which has got an overall composite. Okay. And the interesting point here is, when the top 40, the recent constituency was put together in the year 2000, the value was in and around 10,000 points. As we know more recently, it was hovering close to the 50,000 level. Put differently, a 10 Rand invested 14 years ago would be worth 50 Rand.
Wow.
Today.
All right, so ease of getting in and the costs, what are we talking about?
So Satrix is available as an online product from the Satrix website. Your stockbroker or financial advisor can get you involved. The charges are very slight. You'll find that it'll be under 1% to get involved in terms of charges, that is your entry charges. And in terms of the amount that you outlay, you can get started for a couple of £100. So for example, 500 Rand a month would buy you a few Satrix units, and you'll be able to build that up in your Satrix account with your broker or Satrix itself. And if you decide that it's not in your budget, you can freeze that account and you continue to own this.
Yeah. So while you have money, so you can do it in two ways. You could put in a lump sum.
Correct.
Or you could have this monthly debit order coming.
Correct. The lump sum, you'd require more than 1,000 Rand outlay, and then for a debit order, you'd be able to get involved for a couple of £100.
Okay.
What I think is unique about this is the fact that it will continue to grow over time. As these businesses develop, you'll find that the value of the Satrix, that is to say, the value of the top 40 companies in the JSE, continues to grow.
But
And
what about the day-to-day movements up and down?
I would recommend that you look at a very big picture. You take a view that you're investing in the top 40 businesses, and that you're not going to be concerned by daily fluctuations or market corrections. I'd also like to suggest that of the few thousand unit trusts that are available in South Africa, many of them look at the top 40 as the benchmark. They try and do better than that. And many also end up failing. So there's only a handful of money managers that actually beat the top 40. So you're buying the winner. You're buying the benchmark.
But this is a long-term investment. This is not for I want to buy a car in a year or 6 months or something like that. How would you define long-term?
So this isn't an investment where you're going to necessarily double your money in a short space of time. It's not a speculative investment. This is, in its best description, a long-term allocation. So you would look at this between 5 and 7 years. And I wouldn't recommend that you try and time the market. Just put in monthly outlays if you can afford to, and let the magic of the market
and close your eyes. Compound growth, compound interest, the ninth wonder of the world. Thank you so much for your time today, senior trader Lavan Gopaul. Always remember to speak to your financial advisor before making any investment. Now, our daily question and answer feature, Need to Know, coming up after the break. Stay with us.